Hello, everybody. Welcome to part 3 of Make Your Money Move, a guide to sustainable investing. Today, we will give you a little toolbox to help you get started with sustainable investing. As usual, first some housekeeping. Everyone is muted, so if you have a question, just type it into the chat function on the right-hand side of your screen, and I will ask Samuel for you right away, or I'll save it for the Q&A at the end. A little bit about who we are at Responsibility. I think of us as pioneers of impact investing. We've empowered millions of people in emerging markets since 2003 with access to finance. We also invest in sustainable food and agriculture, and our initiatives to fight climate change through finance have reached nearly $1 billion US. All right, over to you, Samuel.
Great, thank you very much, Stacy. Big welcome from my side as well to this third webinar. I see we already have quite a nice turnout again today as well. So good morning to those in the morning, good afternoon to those that are already a bit ahead of us. To start off, I would like to make a small comment. On May 8th here in Switzerland, we had Earth Overshoot Day, which means that at this day, we've used up all the resources, respectively, if the entire world was to live like we're living or consuming, we've used up the resources that were available to us this year. And I think this kind of puts it in perspective of also the necessity to kind of go into a mindset of thinking a bit more sustainable, or a lot more sustainable, also from an investment perspective. Quickly summarizing of what we looked at in the last two webinars to make a connection. In the first webinar, we took a quick look at the history of investing, what's happened during the course of time, how markets got established, and so on. We also learned that through your savings accounts, you actually never really made a whole lot of money, and that it's important to pursue other possibilities if you want to create a bit of a bigger return with the financial assets that you own. In the second webinar, we started to look more into the topic of the SDGs, the Social Sustainable Development Goals established by the United Nations. We looked at the difference between sustainable and impact investing. We looked at the additionality and the intentionality within impact investing, how the filters are applied when selecting different investments, and then how this is also reported back to the investors. Like Stacy mentioned today, we will look at giving you a bit of a toolbox so you can make your own investment decisions or form your ideas of what you want to invest in. And before we get started, Stacy, I would like to launch the first poll questions. So you could show these to our participants, please.
Here's the first poll.
So have you spoken to your bank advisor or to your financial advisor about sustainable investing? We would like to get an idea on whether you have done this before or not. So simple yes or no question. There's no rights or wrongs in this. I think most of us have some kind of a relation with at least a bank or some kind of an investment advisor that would be kind of the first contact to be talking about this. How are we doing with the answers?
We're at about 60%. It's slowing down though, so I'll give it another 10 seconds, let's say. Almost 70% now.
Wonderful. I think then
all right. One more second. Okay, I'm closing the poll.
Very good.
Here are the results.
Okay, pretty evened out. I guess, yeah, this kind of shows that not everybody has made this step yet. There's about slightly under half that have spoken with their bank or their investment advisor about sustainable investing. I think to go forward, for those that have already spoken to their advisor, my next question would be, were you happy with what they had proposed to you? So with the offering. So there we have the second quick poll question. Are you happy with what your bank or your investment advisor had showed to you from their arsenal of investment solutions? I also see as a side comment that we have, again, quite a nice turnout today. So hopefully people from all over the world as last time. Always nice to see that this is not something that's only limited to Switzerland, but we're able to reach people across the globe with these webinars.
All right, I'll give
Already
it
have.
a few more seconds. I think it's slowed down though. All
Very
right,
good.
closing the poll.
Wonderful. You were not happy. Okay, that's very interesting. I would say not so surprising. I hope with this toolbox we will able to guide you a bit through some of the questions you can ask yourself, and you can also ask your bank or investment advisor to maybe in the future have a better pool result that you get some information that you're actually looking for. So looking at some of the things, I think before you actually go to the bank, it's very important for yourself to have a clear idea of what's important for yourself. And I think you should spend some time sitting down to prioritize from a sustainable perspective what you actually want to achieve with your money. There's different guiding points that you can use. One is, for example, the Sustainable Development Goals. You can check the 17 goals that we looked at in the last webinar and see which kind of topics you want to address or which type of goals you want to address to contribute to their achievement. But you can also even take a further step back from investing and kind of take a look at your daily life and see what are things that you value when you just go about your daily life. So for example, this could be you don't use cars, or I'm focusing more on public transportation as an effect to reduce CO2 emissions. Or for example, the way you shop your food in local supermarkets, focusing on more organic food or more local foods, etc. And then I think once you have this idea of what's important to you, you can then also kind of put that in the mindset of sustainable investing. Now, two of the other components that are important to keep in consideration when making investment decision is what is your time horizon? How long are you willing or able to put money down and not have to touch it for to use it for other things such as buying and making a bigger investment in house or car or whatever, because in the end this will have two effects. On the one time, the longer you can leave your money invested, usually the potential to generate larger returns over the longer time are higher. Also because you're able to kind of bridge dips and bumps, as we're seeing, for example, now during the COVID-19 crisis. You're able to bridge those and recover from these bumps in the long term. Now, the third question that you also need to ask yourself, and this is not relevant to sustainable investing, this is relevant to any kind of investing, is what kind of risk are you willing to take? Are you a person that can sleep well if you see that there's market turmoil and there's high volatility, or are you a person that prefers to keep the money a bit on the safe side and not have a large volatility and gets nervous as soon as the markets or the environment starts to move? Because these will be important points that you need to keep in mind when you look at different investment solutions. So from my personal experience, when I did this, I got very excited, for example, about microfinance. And the reason why I got very excited about microfinance was mainly because I realized the achievements or the reach that you can have with giving people access to finance. I'm personally a strong believer in giving people toolboxes to achieve their independence and to be able to develop their own business rather than just telling them what they should do or giving it for free. I later then, when I continued or started to invest in microfinance, also saw the additional things that you can do rather than just doing pure entrepreneurial development, that you can also impact, for example, climate, you can impact the access to schooling, you can impact the access of health. And I came to the realization that with microfinance, you actually have quite a broad reach that you can affect people's life in a very positive way while still making very decent market rate returns. So this is just from a personal input and on how I got excited in this topic with microfinance in specific.
Samuel, you were studying microfinance at university, right?
Yes, that's correct. I actually also wrote my bachelor's thesis on microfinance, looking exactly how microfinance institutions make their fundraising to be able to provide that money on to their end customers. And this was my first interaction with this topic, and been following it ever since, about 10, 15 years now. Yes. So once you have your questions together, you can then go to the bank, and basically you can ask the bank or your investment advisor the exact same questions that you asked yourself. And I think at this point it's very important to make this first step and approach the bank, even if you're not sure or not fully understanding the whole environment, because at some point you just need to start asking questions and gathering information. And I think it's important also to be aware it's in my opinion better to ask your bank, driven by your values, what they can offer you to invest, and just ask them what sustainable investment solutions they have. We're seeing quite a lot of different solutions popping up, and there's also on the bank side certain interest to push certain solutions more intensively, and it doesn't always then allocate with the interests that might be on your side. So in that sense, the clearer you have an idea of what you're looking for, the more likely you will be more satisfied with the solutions that they will be able to bring you better solutions to your demand. And I think some of the things that you can definitely ask is when they offer you a certain solution is, what are they trying to achieve with this investment? So we saw the intentionality topic in our last webinar when we were looking at impact investing, is what are you trying to target? What problem are you trying to solve with this kind of investment, beyond just generating financial returns? Some of the other questions are that you can ask your bank and go into more detail is, how do they do the selection in these portfolios? So what filters are they applying? Are they doing just a negative ESG screening? How are they avoiding to cause any negative impact with the investments that they're making? And these might be then some answers that you get that might be quite detailed and will also probably take some time for you to digest, and maybe do some additional research on your own to understand what they're actually applying. Then there's also the threshold question. We every so often see in certain funds that some investments have minimum or maximum, for example, turnover participation. So you could potentially see a company that's invested in oil but only makes, let's say, 5% revenue of oil, and they would still fall under a sustainable investment solution or a best-in-class solution. And I think there it's important to understand these thresholds, because based on these you are also able to exclude certain investment solutions that might not fall within the values that are important for you. Then also looking at the biggest positions will give you a better insight of what the fund invests in, and also answer what they're trying to achieve. So looking at the biggest positions, these would then be the biggest companies or the biggest projects that you would be holding if you invest through a fund, for example. Then also going a bit into the measurability that we've looked at in the last webinars, you should definitely understand and ask your bank how they are measuring these companies. So what are the metrics that they're collecting? What are the points that they're focusing on if they say that they're trying to achieve or they're trying to target a certain topic within the fund? And then lastly, obviously, how is this reported back to you as an investor? How are you getting this information prepared? Is this a monthly report? Is this a quarterly report, etc.? And how can you as an investor keep tab on these metrics that are being collected by the banks themselves? So once you have all this information, it's obviously very important for you to understand this. And I think please do not be afraid to ask as many questions until you feel like you're understanding. In the end of the day, this is your money, and you're allocating this money, and you're trying to do something that meets your standards and your ethical values. So I think it's in your right as well to ask as many questions until you actually feel comfortable to make a decision. And it's also very important for you to be able to ask these questions, because this also shows that you're interested and that you want more information on what's going on. So already coming a bit to an end, I would like to summarize the steps that the questions that we've now looked at. So the first step would be for you to kind of be clear about what you're looking for, which are the topics that you're looking to address with the money that you're allocating, and then directing these questions directly at the bank. What is the fund trying to achieve with the investment? How are the companies being selected? How are the metrics applied? How is the fund not doing any negative harm? And how are you getting these numbers and these information back to you in the form of reporting? And I think given that I've now just said that I think it's important to ask questions, I would like to open the webinar for questions so that we can also have some of a discussion and hopefully be able to address some of the questions you have in how to go about. So Stacy, I think we can open the webinar for questions from the audience.
Absolutely. Before we do that, I just want to make sure everyone's aware that we have a handout on the right-hand side for your sustainable investment toolbox with everything Samuel was talking about just now for you to use on your own. Also, if you have any questions now about that, you should bring them up. First question is, what is the minimum amount that I need to have to invest in sustainable investing or any type of investing, but especially sustainable investing?
So fortunately, sustainable and impact investing have become somewhat mainstream, and we're working with very low minimum volumes. So for example, if you take the responsibility retail fund focusing on microfinance, the minimum investment is 100 Swiss francs or $100. There's some of the robo advisors that are out there that also work with relatively small amounts, where we're talking about maybe 1,000 or 2,000 Swiss francs. So the threshold to get started is really very small, and I think this is also very important for you as an investor that might be new to this topic to get started. Basically, that you can allocate a small amount, let's say 1,000 Swiss francs or 500 Swiss francs, and just try to get into it and get into a habit. Look how this is developing, how you're getting your information, and so on. And this will also then going on help you to further develop new questions that might look at new investment opportunities.
Thanks. Next one. Are environmental, social, and governance funds, ESG funds, enough? I mean, do you consider them enough as sustainable investments, or do you need to invest in something further than that?
I think in the end, as we mentioned before, it always depends how these filters are applied. So maybe looking back to last week's webinar, these ESG or environmental, social, and governance filters can be applied very differently in the different investment solutions. So per se, I would not be able to exclude funds or say that they're not enough, but I think it's very important to look how the underlying portfolio is selected and how the filter is applied. And depending on the things that you might see, you could possibly see an oil company in an ESG fund because they're just applying best of class, and this oil company is doing maybe a little bit more on the environmental side than its peers, and with that it can fall into the fund as a selected company. So I think going back to the questions that you should ask your bank is really how are they applying these filters and what are the things that are inside this fund, to be able to decide yourself also if this is enough or if this is not enough, because in the end it's also a personal question whether you value, how much you value these components and how important it's for you of what is in the fund and where your money is being allocated to.
Perfect. Next, what is the usual investment time frame for retail investments?
So again, speaking on behalf of our retail fund, we suggest a horizon of somewhere between 3 to 5 years to be able to take advantage of the development of the performance. I think in general, the longer you can invest, the better, because this also then allows you to, as I mentioned at the beginning of this webinar, allows you to recover certain dips that might occur during the investment period. So I think it's important to keep in mind, not every year will be a positive year or a good year, but the longer you keep your money invested, the more you can benefit from the long-term positive development and will be less impacted from short-term dips.
Perfect. Do I need a finance advisor to start investing in ESG, or can I start investing by myself?
So you do not need a finance advisor to do it yourself. I think it depends more a bit on the level of comfort that you have to start doing some research, and also a bit of the drive to just give it a try and start getting exposed to this. There's definitely tools and platforms available where you can make the investments yourself. Some of them are online platforms. Here in Switzerland, there's a couple. So there's definitely ways you can get involved in this with yourself. There's also banks, especially looking at the retail fund. You do not need to have a mandate or a discretionary agreement with the bank. You can basically just have a normal portfolio that you manage yourself and then do the title selection information on your own. I think just keep in mind that this is a bit more work, but in the end, yes, you don't need an advisor to do this. You can do this on your own if you wish.
All right, next. If I found a fund that could be interesting to invest in, how do I find the metrics that are used and what kind of harm the fund might be doing?
So there's a couple of ways you can go about this. If the fund manager is transparent about how they're doing the fund selection, they should have some kind of a reporting on how they go about this. So you should either see this on a quarterly report, on an annual report, even maybe on a monthly report. You can also try to reach out directly to the fund manager and ask them these questions. If you have a bank that works with this fund, you can ask your bank on what kind of information that they can provide you with. There's also platforms that look at these funds in more detail, such as Morningstar, and give you more metrics on how these selections are being made and what components are within the fund. So if you decide to do this on your own, this will mean that you'll need to do a bit of research and looking up what's in the fund. Or you can also try to get this information. You should be able to get this information from the bank or from the reports that are being obtained from the asset manager or from the fund manager.
Great. Next, are there any legal requirements and tax implications for those who are not citizens of Switzerland?
That's a very good question. I'm not going to be able to answer this question in details as I'm not a legal and I'm not a tax advisor. I do know that for Americans, it's especially complicated as they are in a bit of a tricky situation with the regulatory framework that they're sitting in. It very often means, for example, that they might not be able to invest in certain funds that are not registered in the United States, or that funds might not be able to accept money from Americans if they're, for example, registered in Luxembourg and don't have the necessary structure. If you take Europe, there is quite a broad framework where with passporting that the funds are available. But again, this is something that you should then definitely look at with your bank, as they will be able to explain you more detailed what kind of restrictions and requirements there are if you're not sitting in Switzerland and you're looking to invest in a Swiss retail fund, on how to go about this.
All right, next, what's a recommended investment horizon for funds invested in agriculture?
I think you can, in generally, use the same kind of horizon if you look at the different asset classes. So I think the horizon is not so much defined by the theme that you're looking into. I think it's more defined by what kind of an asset class you're looking at. So in the private debt space, the average horizon that we're working with is somewhere between 3 and 5 years that we recommend as a minimum. In the private equity space, often this is then limited by the fund structure itself, or for example, the fund would then be locked for 10 years. So that would be something where your money is locked in for the next 10 years until you have access to that again.
All right, this question references back to the beginning of the webinar. Samuel, what makes responsibility a good place to make impact in financial inclusion and microfinance?
So we're one of the larger microfinance investors. If you look at from an impact perspective, if you look at the market, and we have quite a broad network. So we're currently invested in over 70 countries with our microfinance funds, meaning that we are able to generate quite a broad impact through the investments. We're also working very hard to be as transparent as possible on how we're going about to select the companies, on how we do the monitoring of the companies, and how we go about the reporting to investors. So you will be able to find a lot of information on a very transparent basis of our activity and how we are going about to perform these activities. So I think this is definitely something where we are standing out from a diversification level, but also from a reporting and information level.
All right, next, are you able to recommend any solutions, platforms, or providers for retail investors?
Unfortunately, from a legal perspective, I'm not allowed to make any recommendation on that level. I am, however, happy to have a coffee and exchange ideas, but I will never be able to make a recommendation.
All right, next, how often do your country risk managers go to the fields locally to do risk assessment? It's a very specific question.
It is indeed. And I think I will not be able to answer it in a general date or time perspective, because the monitoring that we do with our field officers depend very much on the countries and the companies. So we have, each company gets sort of a due diligence process at least once a year, but depending on how the company is doing and how the country is developing, this can also be on a more regular basis. What we do get on a monthly basis is also the whole metrics from the companies that we require from them. So these are the financial metrics, but these are also the developmental metrics, where we want to see how the company is developing. So these are assessed on a monthly level, and then the visits can be somewhere between monthly and annually, depending on how the company and the country that the company is in are doing.
Okay, this one's back to investment horizons. Does it make sense at all to invest in responsibility funds for 1 to 2 years?
I'm not going to say it doesn't make any sense. I think you just have to be aware that if you keep the investments in general, and I think this is not only for a responsibility fund investment, if you keep an investment for a very short time, you run the risk that you're not able to make up certain short-term losses over the longer term through the up development of the values. So I think this is not something that's specifically to our funds, but I think in general, if you're looking to invest, you should always approach that with a longer-term horizon.
All right. Next question. What makes Switzerland a competent or favorable environment for a field like impact investing?
That's a very good question. So we've had quite a long history in impact investing. So we have several big impact investors that are housed here or at home here in Switzerland. So in that sense, there's quite a broad expertise in that activity. I think there's also the fact that we have a financial service sector that's quite developed and functioning very, very well. That also allows us to do the necessary fundraising to be able to do the allocations on the investment side. So I think it's a mix of factors. One, having a tradition in impact and sustainable investing, having a financial sector that's quite developed, and also having a high level of education of experts that have been in this field for a long time, that then are able to produce products that are very effective in the mid and in the long run as well.
All right, thank you, Samuel. I think we'll wrap it up there. Just to remind everyone, check out the handouts on your right-hand side. Please follow us on LinkedIn if you want to stay informed about further webinars we will host. Thank you very much. Anything else you want to wrap up with, Samuel?
Yeah, I think, well, a big thank you from my side as well to everybody who's been participating over these last 3 seminars. It's been webinars. It's been a big pleasure to chat with you guys, to answer your questions, see what you guys are up to. I think one thing I would like to give you on the way for your next steps in sustainable and impact investing: also reach out to your friends, speak to them about sustainable investing, do exchange, and I wish you the best of luck in formulating your questions and going forward. Feel free to reach out to me on LinkedIn. I'm happy to answer any questions going forward. Hopefully after COVID-19, when we're able to have a coffee, I'm also happy to have a coffee with anyone who's interested, and looking forward to meet a couple of you guys going in the future. Thank you very much.
All right, thank you, Samuel. Have a great day, everybody. Bye.
You too. Bye-bye.